Hi there. Today we're going to begin the process of defining the vision and the features and the capabilities that we want in the portfolio operating system. The process that we're going to follow to do that is through something called mind mapping. And the idea behind mind mapping is that we can get ideas down on paper or on the screen, and we can rapidly iterate and drill down into them and continually refine them until we get to kind of a point of diminishing returns. So I'm going to be using a tool called Miro for that. And Miro is a great tool. It's used by a lot of user experience design people for what they do. I'm just going to be using it right now for the mind mapping purpose of it. And Miro comes with a whole bunch of different templates, and one of the templates is a mind map. And so I'll go ahead and use this. And they're trying to be super helpful with a bunch of extra stuff and some starter points. What I'm going to do is I'm actually going to get rid of the initial bits here, and we're going to begin thinking through, like, what do we want? So first thing is we're going to sort of rename this, and this is going to be the kind of the vision and features for the portfolio. Yikes. The portfolio operating system. There we go. All right. That was harder than it should have been. So I'm going to start off by kind of talking about, I'm just going to throw down a bunch of different things and then we'll be able to reorganize this. I don't know why, but I'm going to start off with tech stack. So I know that the way that I want to build this thing from a tech stack perspective is there's going to be front end components and there are going to be back end components. We don't need this guy, so yeah, get rid of him. On the front end, I know that I want to use React and TypeScript. So what do I do here? We want to use React. We want to use TypeScript. I'm going to use d3.js for graphing. We're going to use a bring your own key style large language model for when we might want to use things like ChatGPT or Gemini or Azure OpenAI. And that actually gets to something that we're going to want to talk about. So while I have that on my mind, I'm going to actually say, who are the users? So I'm a user, Paul. That's me. I'm Paul Galvin. We want to have technical users, or technical and experienced users. And we also want to have non-technical users to be able to use this tool as well. As a matter of fact, ideally, there'll be more non-technical users than there will be technical users. One of the reasons that I put myself here specifically is because ultimately I am going to be sort of the primary end user here. All right. So, So getting back here, let's just pull this a little bit out of the way so we don't get too distracted. On the back end, we know that we're going to want to have a Postgres database. And one of the things about Postgres is that it's free, and we can just kind of throw in a couple of notes. It's free. We can also say that it's deployable to the cloud. And this gets to this deployable to the cloud concept is feeding off for me for non-technical users is that how are they going to run it, right? How do they run it? So they could run it locally, but challenge with this is need to download and install, a bunch of stuff. And that stuff would be like Postgres. They'd have to install the app, clone it from GitHub and all that. And that might be asking too much for non-technical users. So the other option is they could run it in the cloud. Now, there are a lot of implications for running it in the cloud. That means that we have to pick a cloud to run it in. And so when I say pick a cloud, I mean things like Azure, AWS, Google. So that's sort of like we're going to put a pin on that because that's pretty far down the road, but just wanting to kind of think about it right now. Like let's have it on the board so that we don't forget. And that's a big one of the big values of using these mind maps here. Okay, so and you can see that this is sort of a little bit of a messy process. Started off with tech stack, which is actually part of, in a lot of ways, that's putting the cart before the horse. But also, when we're talking about who the users are, and we're getting all the way down to like, well, how are these non-technical people going to do it? Well, suddenly we're talking about cloud hosting, and there's a lot of that. So you can see how this mind mapping process, runs its course. Okay, what other parts? If we zoom in a little bit, on the back end side, we're going to use Postgres because it's free, because we can put it up in the cloud easily enough. And I guess I'm just going to make another note here is that we are going to have lots of relational data, orders, transactions, or I should say, we'll put stocks to transactions, stocks to orders, etc. So it calls for a relational database as opposed to, say, a document database like Cosmos or Mongo. And then getting back to this, for the business logic, we'll use Node.js plus TypeScript. And this has the same benefits as it's free, deploys to cloud nicely, has a very established ecosystem, etc. So it's a good choice in that regard. Now there are lots of other options, so I guess we could oops. Let's delete you. What we could say is that, for consideration, and although I don't think I'm really going to go down that path, but there are other options, of course. So for the back end, we could do Go, for example. We could do C# and with maybe Microsoft Aspire, right? Or it could be Python. Probably a lot of people, they reach for Python first, especially, well, a lot of people reach for Python. I'm not a Python guy, so it's not going to happen, but just kind of get it down. All right, so here we go. This isn't going the way I fully expected it because I really wanted to start off with features and I went right to tech stack, but, you're just getting insight into my brain here a little bit. All right, I'm going to do is I'm actually going to move this. Who are the users is probably the most important thing, and I'm going to be treating this a little bit importance or priority as a little bit like a clock. So the closer that we get around, so I'm going to move the tech stack, which is really sort of the last thing that we should really be thinking about. We should be thinking about the users, and then we should be thinking about core functionality. So what is the portfolio operating system supposed to do? Well, it definitely needs to, I'm outside and my keyboard is incredibly sticky because it's so humid. So core functionality wise, we want to be able to track we want like good tracking of our current state. So what do I mean by that? Is we want to know what's our margin usage. We want to know what's our value, our portfolio value. We want to know what are our orders. So stuff like that. Now, a lot of this information can come from, and I'll just put a little note here and say, note, much of this comes from the broker UI. So we're not really going to try to replace a broker UI with some of this, but in the course of grabbing the data that we need to track our current state, we are necessarily going to start building up the information that we need for the secondary and tertiary features. So when we want to start doing historical analysis, if we're grabbing current state and we do that, a couple times a day or even every hour, now we can actually start doing some analysis of well, what happened over the course of a week, and that kind of thing can provide really valuable insights. Okay, so anyway, we know that we want to be able to track our current state. We want to be able to look at the past, and so that's what I was just talking about. Why do we want to do that? We want to do that because let's put a few reasons why. One of the reasons is that we want to be able to understand drawdowns. So drawdowns are basically they're pretty simple. It's like you over the course of a year, your account value will be let's say it's up to $100,000, and at one point the lowest point is say $80,000 for various reasons, and maybe you took money out or more likely the value of your portfolio decreased because of some geopolitical event. Well, the drawdowns are making it so that we can measure the health of our portfolio, and especially after a drawdown, how does it recover? So stuff like that. So we're going to be able to understand drawdowns. There are going to be other things that we want. Oh yeah, another thing is when we're talking about options, care about theta. And theta is just basically speaks to when an option, for me, like I sell calls all the time. So when I sell a call on Monday in the week, by Friday, I will typically roll it out. But actually, the longer I wait to roll it out, the cheaper it is for me to buy it back. And actually, so a roll is basically two legs to you buy back a call and then you sell a new one. So that's what a roll is. It's two different transactions, but they're bundled into one transaction from a broker perspective or an order perspective. So anyway, all this to say is that if I can understand the value of calls through the course of the week, I can pick the best time to do that roll. There's this timing dependency. So there'll be probably other kinds of reasons why we want to look at the past. So we want to track our current state. We want to look at the past. Looking at the past implies that we're going to want to be able to do daily snapshots. So here we're starting to get into like an actual feature, a daily snapshot, and that's going to be our net account value. It's going to be all of our positions. It's going to be our maintenance success, or I'll just call that margin information. So that things like what is our actual margin usage at the moment, what's our maintenance success. Probably talk about what those mean as I build those features out if you're not sure, that kind of thing. So we want daily snapshots when we're looking at the past. We also want to be able to understand our true return on capital. So let's just call it return on capital. And this really is, we want to, the value I think is most important is time weighted return on capital at risk. So that's a big mouthful. So what that's saying is that basically over time over the course of a week, over the course of weeks and months, you have a certain amount of your money tied up in stocks, and that money is at risk, right? Because the stocks in theory could go away or it will reduce or increase value. And so just simply sort of like looking at your total number and dividing it by 12 is actually not really the right way to get a good value of your return on capital. So ROC is dependent on what's happening in the past. We'll probably come back to some more reasons why we want to do that. But another one is that we want to be able to have reduce cognitive load. So what do I mean by that? So I'll just put this down. It's not really a feature per se. It's more of an outcome, but reduce cognitive load. I knew I was going to spell that wrong. Cognitive load. Okay. So the idea with cognitive load, or the way that we can reduce that, is basically through decision support. So through decision support, for example, like let's say that you have 140 positions, right? Which is what I have anywhere. Typically these days I have anywhere from 120 to 140 positions. So decision support is going to help me is like, out of all your positions, what should you do next? So rather than me, say, pulling up my broker UI for E-Trade and seeing that big, gigantic, long list of things, instead what I can do is I can just go to a screen that says, hey, this is what you should be looking at right now. These are the ones that are most important to roll, the most important entries you should make, the most important exits you should make, and those kinds of decision support things. Another way of thinking about decision support, though, would be all right, so let me just get a little specific. So role assessment recommendation. Another one would be margin actions. So let's say that you're imminent to have a margin call. Well, you want this ideally the system to first tell you that, hey, you're about to get called on your margin, or your margin, your maintenance excess, which is the amount of money that you have unused in your margin, that your broker insists that if you fall below your maintenance excess, then your broker is going to call you up and say, hey, you got to deposit more cash in your account, or we're going to start liquidating stocks on you. So margin actions would be first being aware of it. Oops, what did I do here? Go back. All right. Is you want to, did I accidentally get rid of that? Oh yeah, I don't know what I did there. Okay, so margin maintenance, yeah, so margin actions. So margin actions would be first off like alerting you to a problem, but then also like liquidation priority. So let's say that you're facing a margin call because the market went down, and maybe some of your individual stocks, the maintenance requirement on them went up. And so suddenly you had a safe maintenance excess, and now it got cut in half, and that could happen very quickly, right? You don't want that to happen, but if it does, then what do you do? So you either have to deposit cash, or you have to start selling your own stocks to keep ahead of the broker. So liquidation priority would be kind of how do you do that? Okay, and speaking of margin, boy, really struggling with the humidity out here. Is margin help? I'll just call that as core functionality. So what's the idea behind margin help? So the idea, we talked about this, is liquidation priority. So kind of repeating myself here, but also we want to have handbooks. So we want to have a margin handbooks, and one is just sort of like, what are my rules for margin? So this right here is just kind of a narrative. Like, I've thought about it, and I want to make sure I have the ability to withstand a 15% overnight drop in the market without getting a margin call. So that's just me documenting in the system that this is my rule right here. And by documenting this, I am, keeping myself aware of what I need to be aware of. So I'm not just sort of willy-nilly at risk, bumbling into margin call situations. But also at the same time, the act of doing it is going to help reinforce it for me. And then we can even get some decision support out of this. So let me talk about that, is on the AI-led or AI-assisted decision support. And what I mean by that is that if I have a clear statement of rules for what my margin is, I could then give those rules to like ChatGPT, for example. And I'm going to probably throughout this series say ChatGPT because that's what everyone's thinking of, but we are going to have a bring your own large language model kind of concept here. But the idea is that I can provide rules, right? The ones that I wrote down in my margin handbook, and I can provide system data. And then the AI tells me, qualitatively where I'm at, and makes recommendations based on my own rules. So that's the idea. And this is actually a really great use case for a large language model, because this is perfect. You give it basically some rules, and you say that my maintenance excess or my system should be able to withstand a 20% drop overnight in the market. Here's the current snapshot. These are my portfolios. These are the broker margin requirements for each one of them, and this is my everything else. Whatever, all this stuff we'd have to figure that out in detail when we get to that point. But we hand that off to the AI, and then the AI will look at it and say, "Hey, you're good or you're not good," and make recommendations for me. So that's that concept of AI assisted decision support. Okay, let's get back here. So another one is crisis handbook. So basically this is saying is, what do I do if that margin call comes, right? When the margin call lands, or if let's say I anticipate it's going to land, say this afternoon or tomorrow, or I'm right at the edge, it's going to be really hard not to panic for a lot of people in that situation. So if we sit down in advance and we think through, This is the sequence of events that I should do. I'm going to either transfer money from an emergency fund that I have into my brokerage account that alleviates the risk of the margin call, or I am going to sell some stocks to do it, and the priority of it. But whatever it is, or maybe I want to do a wire transfer. You don't want to learn how to do a wire transfer when you have a margin call. In fact, I don't think you can really even do a margin transfer that quickly. You actually need to have a little bit of planning in advance. And so you really need to, that's the idea behind the crisis handbook, is that if the crisis lands, you already thought it out, it's documented, you just follow it. And hopefully it prevents you from making a terrible search situation into a catastrophic situation. It's really, if you're getting into crisis handbook territory, you're probably really more into damage control, because you're already going to take damage. Okay, so that's sort of the margin help, but also the other thing too. So those are handbooks. Is this, we just want like ongoing visibility and alerts. So the idea behind this here is like the broker, like I can go to E-Trade and I can at any time see what my maintenance excess looks like, and I can know, okay, am I in trouble or not, and all that kind of thing. But what we really want to be able to do is we want to be able to have the system be more proactive in telling us what's going on. So tell me when a margin call is imminent. I want to tell me when I'm breaking my own margin rules. And then I also want to track, and goes more into sort of the history side, but I want to track margin usage across many dimensions. Because margin is actually kind of a precious resource. Like it's a bit of a two-edged sword, because you always have that risk of a margin call hanging over you. Excuse me. But so what? You use it because it's incredibly valuable to you. So we want to be able to understand not just my current snapshot of where I'm at, but we also want to know, how have I been using it? Have I been walking close to the line? Like for instance, when I started to do a little bit more analysis on how I was using margin, I realized that I was routinely very close, like nowhere close to a 10%. Like 10%, I probably would have been in trouble. 5%, I'd probably be okay, but 10% was real in trouble, and 20% would have wiped me out. And I had no margin crisis plan. So these kinds of things. So we want to be able to understand and look back in the past. And then also things about margin is that we want to also understand like how valuable or how valuable and how well are we using it. So, as an example, typically when different brokers will have different maintenance requirements or margin requirements for different stocks. And so if at E-Trade, like they have like a 35% requirement for some stocks. So that means that if I buy $100 worth of stock that has a 35% maintenance requirement, then, or house requirement, then I will have to put up $35 of my own, and they'll loan me the rest, right? So if that stock goes up, or if I'm rolling and I'm collecting premium on it through different kinds of calls, then I'm actually doing really well on that. I'm making a lot of money off of that $35 investment. On the other hand, if it's 100% house requirement stock, then it's dollar for dollar, so it's less efficient. So there's a margin efficiency question right there. So actually, let me put that in, e.g. margin efficiency. And one of the things I like about putting a lot of effort into margin is I think that margin is one of the ways that retail traders can really scale their system, right? And scale the capital that they have. A lot of people are, you read on Reddit or just talk to people, in your family and your friends, and they're terrified of margin, and they think it's a fool's errand, and it's very, very dangerous. And of course it is, it can be, but when you have the right kind of cockpit to look out with all the dials, the indicators that you need, then you can do fine with margin. There's no, it's so valuable when it's used right that it's kind of a shame not to use it. All right, but that's it for my soapbox on margin. Okay, so let's collapse this and start getting to a bit more fighting here with this. Okay, let's also reduce, pull you, come on. Let's go out, all right. And so one of the other core features that we're gonna want is we want, what do we want? We want, oh yeah, okay, so we are gonna want a screener. So a screener is like, how do I find stocks to invest in? So that's really what a screener is. So we're going to want our own screener. So we're going to want like at least some kind of basic screener. Um, I have a particular way of screening for stocks. There are third-party screeners out there, so it could be that the screener function is the kind of thing where people are going to use their favorite screener, and then they might use the portfolio operating system as a way to manage and do decision support. But I want to be able to support. I want to have a screener built in as well. And actually, this sort of gets to a topic that probably should have also done here. So let's add something here. I'm going to pull you down a little bit. And the idea is, let's talk about the life cycle here that we want to support. So what are we trying to do with this tool anyway? So probably should have started with this, but again, here we go. The messiness of doing mind mapping live. So the idea here is that we want to be able to, the overall life cycle is buy stocks. We want to be able to analyze what's happening. In my case, and in I think a lot of the use cases, that we want to be able to sell options against those stocks or puts. So these could be calls, they could be puts, etc. And then they're going to probably cycle on that for a while, and then eventually they're going to close those positions. And along the way, going to earn dividends. Dividends. If I could spell it, I still can't spell it. Dividends. Premium from options. I'm not sure if there are other ways to earn money off of stocks off the top of my head. I guess we could call it appreciation. And well, all right. Well, my point isn't. Yeah, appreciation wouldn't really fit for this. And the point of this is that we're going to earn these things, and we're going to do something with these earnings. So we're going to spend these earnings. How are we going to spend it? We're going to pull from our broker account and buy a sushi dinner. We might pay a car payment. We might pay the mortgage, even better. We might just, and this is what I've been doing, is just reinvest. And so we sort of end up in this cycle where you're buying stuff, you're buying stocks up here, paying attention to what's happening. You might be selling options against them, or just holding tight and waiting for a dividend to come. And you're going to be cycling around. Let me take this cycle out. It doesn't really help. Eventually, stop it. Eventually what you're going to do is you're going to close these positions, and all the way that you're doing it, you're earning dividends, you're earning premium, and you're going to do something with that money. It's not just like even by default, it's just going to land in your cash account and probably earn some interest. So you're either going to pull it out and you're going to buy your dinner, or you're going to do some kind of car payment or mortgage, or go on a vacation, whatever it is that you want to use, or you're going to just you're going to reinvest. And then that just means it goes right back into buying more stocks. So that's the life cycle that we're trying to support. So again, you can see that this thing is starting to build out a bit. Okay, so the screener, its job is, step one is, how do I find inventory? So one of the phrases that we'll be talking that I've landed on, and how I describe my own process, is that When I am buying stock, I'm adding to inventory. So this is finding stocks to add to inventory. So that's the idea. So and this is all about like, well, what are the characteristics about a company that you think is important? And actually, why don't we just throw some of these in here? So it could be size, could be market, expert recommendations, it could be Reddit buzz. For me, it's often about margin, efficiency, uh, and premium that I can collect. It could just be based on vibes. You just like the stock for whatever reason. So there's a lot of different reasons in terms of how are you finding these stocks. It could be Reddit. Oh yeah, I got Reddit. Yeah. And so these are all different kinds of ways that you might be thinking about it. So as we're thinking about what are we going to add to inventory, these are the kinds of things that we're going to take into account these are the kinds of things that we're going to be taking into account. Okay, so that's what our screener is going to do. We need a way to view our positions. Now, I kind of already have this up here, I think. Let me see. Core functionality. All right, so I kind of threw this here into tracking our current state. So I think we already got a good handle on tracking our current state. I don't need to go through that. Like, what's our current value? What are our actual position? Let me just margin usage. So I guess actually here is like, what are our positions? And that would include, stocks, ETFs, options themselves, that kind of thing. Okay. All right, so we're getting there. So we're looking at the past. We're going to reduce our cognitive load. Look at this. What do we have? So that's decision support is really what that's all about. We want help with our margin. Okay, another thing that we want, so I guess I should probably put this underneath core functionality of the screener. Let's do that. We're going to want a screener, and it belongs here. And then another thing that we're going to want is journaling. So let's do that. Journaling. Nope, that's not the right place. Journaling is underneath. Okay. So journaling. So what is journaling? So journaling is a daily kind of retrospective on what I did. And so this might include just sort of, a narrative of how I felt. It could be decisions I made and why. It could be experiments that I'm conducting or want to conduct. And I'll talk about experiments in a second. And actually, while we're on it, we want to do things like, in fact, a couple of things are coming back to mind here. I want to make sure we cover. One is we want to actually have an experimentation framework. And we also want to do something for taxes. So we'll come to taxes, but I don't know why it popped into my head. And then one of the things too is we want AI analysis of the journal. So this is another one of those things that is a really great use case for leveraging large language models like ChatGPT, because the narrative and then these decisions and all these kinds of anything that we're tossing in there is a really great way for us to hand that whole package off to a large language model like ChatGPT, like Azure OpenAI, like Gemini, and it will just give us a succinct kind of view over it. It will offer up its opinions on what we've done and why we did it. And then also the same AI analysis can be used to cross-check our trading rules. And next, let me get into that because we don't have that here. Is a trading rules module here. So trading rules. So trading rules would be things like always selling an option for a minimum of 1%. gain on a week. Um, these are narratives. These are just narrative statements of what we're doing. And then what we can do is when we do the analysis of the journal, we can look and say, okay, this is the stuff I actually did, and then we can cross-check that against the documented rules, which are just going to kind of be black and white statement. By the way, I don't have any of that in the app currently. It's on my backlog, and I'm really looking forward to building that part of it. But the idea is, yeah, that I know what my rules are in the moment, day by day, hour by hour. I don't always follow my rules, and it would be helpful if I had someone looking over my shoulder saying, "Hey, look at you, dummy! You broke your own rule. Don't do that again." So give me help. It's a little bit like an accountability partner in a sense. Okay, so all of these kinds of things, and actually another one that's really helpful is a hooks into current state. So by this I mean in the journal itself, I could insert daily snapshot, for example. And maybe the daily snapshot just gets added automatically every day, or what. But like as an example, just an easy way to hook in to my journal, which is otherwise just going to be a whole bunch of text. It's just going to be an actual narrative. But I could also say, okay, here in my narrative, like a lot of times, for instance, on Sunday night, as I'm planning out at a high level what I plan. Ooh, and that reminds me, predictions. We want to have a forecast. Forecasting. Okay. So Sunday night, while I'm doing that, I want to be able to do hooks into my. I want to. I'll start off my weekly journal by saying, "This is my current nav. This is my maintenance success. These are some high level plans that I have, and this is also the number I'm hoping to hit for the week, and the number I'm hoping to hit for the month. And if I'm, week 2 or week 3 in the month, I'll say this is how much further I have to go to hit my monthly target." So that kind of thing. So that's journaling. And then since we were just talking about it, let's go to forecasting. So yeah, come on. Okay. So the idea with forecasting is we want to have a weekly forecast and we want to have a monthly forecast. Now, this is going to be the kind of thing that's probably more important for people like me who are really premium focused. Like I'm trading because I'm trying to generate weekly and monthly income through options. So weekly forecast, monthly forecast, that may not be particularly valuable to people who are primarily doing like just trades. Like it's easy for me to forecast stuff because on Monday, going into Monday, I'm going to have like, whatever my 140 or 120 positions that I have at the moment. I can go through and say, okay, this one I expect to be assigned. This one I expect to roll. This one is so far out of the money that I really don't know what's going to happen. So I just have to wait and see. But I can get like a basic idea as to what that forecast is. And then the monthly forecast is all about like, if everything's perfect, then, or here's the range of where I should be at the end of the month. I should hopefully be at least at say $12,000. So I'd really love to be at 25, that kind of thing. And then and then of course, week by week and month by month, your forecast starts matching against your actuals, and that becomes its own kind of feedback loop. If you can be more accurately forecasting, then you have a better idea of what's coming on, and you can start using the portfolio management tool or the portfolio operating system to, uh, manage parts of your life outside of trading, your financial life. Okay, there we go. So that's that. Let me just fill in a few more details about forecasting. So forecasting, we're going to want to be able to do it at stock level, at the option level, and also we want to use the forecasting for planning. So I just kind of talked a little bit about that, but the idea is, particularly with options, we're going to have options where we want to roll them early. I might want to roll them early because they're deep in the money right now, and I have a chance to roll it on Monday morning. That because of theta, this phenomenon and of where because of various reasons, I won't be able to roll it unless I do it, Monday morning or at least on Monday, because by Tuesday it just it may be out of reach. The roll may no longer be available. So I've already decided when I'm doing my forecast that I do want to roll it because I don't want to lose the stock because I like it for whatever reason. mark it as roll early. But I also might have roll late. Roll late would be when either I'm very far out of the money, so I can't get any money on Monday for rolling it, or it's at the money, and I just want to remind myself that this is an at the money guy, and he's really expensive to buy back on Monday, so just wait and keep your eyes on it. So that's kind of a roll late. Or I just don't want to roll it. I want to allow assignment. So these are different kinds of dispositions that you can have. And so part of your forecasting is it's not just how much money am I going to make, but also what's my point of view on this stock Sunday night. It's going to change over the course of the week as the market changes, but you're establishing for yourself what it is, so that when you're tactically in the moment doing your work, you remember what you did, and it reduces again that cognitive load. Sunday market's not open, you got plenty of time to think. Tuesday morning, you have 100 open positions, and you got to make some quick decisions. Pretty nice to lean back on what you were thinking, at least on Sunday, because it's a little less thinking that you have to go through on your own. Alrighty, so that's forecasting. All right, let's go to taxes. All right, so taxes. One of the things that a lot of people like me run into are something called a wash sale. So what would be great is if we can track wash sales, and then just knowing what our wash sales are, it basically makes it so that we can do the right kind of planning to dispose of them if we want to. And I'll just kind of throw, like, a wash sale is the kind of thing that you may want to hold on to, because you think your income in the next year is going to be much higher than the current year. And really what a wash sale is just a way to, it's a lot like a lot of rules. It's a rule that the IRS put in place. I actually want to look up the history of it, but fundamentally the rule is that if I buy a stock on December, let's say I own some stock on December 31st and it's lost value, if I sell it and then immediately buy it back again on January 1st, I've crossed a tax year, so I get to recognize the loss. If we didn't have wash rolls, I could say, oh, I sold that stock for a loss on December 31st, so therefore I can reduce my tax bill. But then on January 1st, you just immediately buy it back. So you really haven't lost anything because you just did it. And so that trick is called a wash sale, and they're not allowed. So what the IRS, but they can't make you hold stocks forever. So what they did is they put a 30-day time gap in between. So if I buy a stock on November 31st, I'm sorry, if I sell a stock on November 31st for a loss, as long as I don't buy the same stock back or substantially similar stock back by within 30 days, so I have until, if you just say January 1st, that's more than 30 days, but then that means that I don't have that wash sale. I clear that sale. So those are wash sales. So there'll be times, like if you think your income this year is going to be higher than next year, then you might want to deliberately pull in those wash sales. If you and actually just another point in this very scrambly discussion about wash sales. So wash sales, you're not permanently lost. Normally, there's a scenario where you can create a permanent loss, but or I should say, you get to recognize the loss normally. It's just that when are you going to recognize the loss? So you can recognize it now, or you can recognize it in the future. Sometimes you might want to recognize it in the future. Sometimes you'd rather recognize it now. And when I say now, I mean the current tax year versus a future tax year. There are scenarios where you can lose your ability. You can lose your ability to recognize the wash sale. I'm not a tax person, so don't take anything I'm saying about this too seriously. Do your own research if you don't know what a wash sale is. You should know what a wash sale is if you're trading actively. Okay. So anyway, you may want to hold on to it. May want it to run out to the. May want to run out to the next tax year. So part of, if you're managing a complicated portfolio, and doesn't even have to be that complicated, actually. You just want to understand, like, what are my wash sales and what's my plan for them. You just don't want to kind of stumble into it. In fact, I guarantee you that in January of 2027, Right now it's July of 2026, but in January 2027 and starting into Q1, when people start getting their broker statements, they're going to see all these disallowed losses, and it's gonna look like they made a lot more money than they did, and they're gonna have to pay a lot more taxes than they think they should have to pay. So that's the whole idea behind wash sales. All right, enough about wash sales for now. Just that we want to have a capability, and that's not the only one. We also probably would like to have, visibility into our tax liability. So the way that we can do that is that we can at a high level anyway, at a high level we can we could track our overall income. And so by that I mean is like we got W-2 wages, probably nearly all of us, right? So W-2 wages, for me, spouse, um, I get some royalties on some stuff. I get, I have a little side business. So different kinds of sources of income that you might have. And then of course, your portfolio and whatever you're going to get from your portfolio. And so by having these kinds of things, we can establish, at least for ourselves, like a big picture view. And so where are we at? Um, and this can also help us to understand, like, quarterly taxes, which you ideally you will have quarterly taxes because you're making enough money for that to matter. So just basically help out. That's all we want. We're not really saying that we want this system to be a tax system, but we do want it to at least give us a little bit of help into, how are we doing? What do we do? Um, I have a pretty substantial tax bill lining up right now, halfway through this year, going into next year. So, and I have not been paying quarterly taxes. So I'm going to have to rely on something called a safe harbor um, provision by making sure that my W-2 wages are 10% higher than last year, something like that. Again, I'm not a tax person, but I vaguely understand it. So I'd like the system to like tell me, like really in black and white terms, like what do you got to do? Like you paid so much money last year. This is what your safe harbor number is for next year. And then I can use that to check, am I on target for that or not? And if I'm not, I can take action. So that's what we're trying to do, is get this system to help us with all that stuff. Okay, let's dig into the experimentation frameworks. Let me see if I can close some of these things so we get a little less. Okay, so the experimentation framework. So let's talk about this. Um, all of us are going to have a lot of different theories all the time about um, what should we be doing, or we're going to be on Reddit and someone's going to say this is what I do, and it sounds kind of interesting. So, but the problem with running experiments is if you don't do it the right way, you're just not going to get what you want out of the experiment. So if you're not going to, because you'll just be going off of vibes and intuition. So a lot of what we've been kind of describing so far is like what's the data that we need to collect, like daily snapshots and what's our current positions and that kind of thing. Well, we need to be able to, and when we run an experiment, we need to be able to measure the success of that experiment against some kind of baseline. And let me give you an example. So again, I mentioned I do cover calls all the time, and a huge fundamental part of my strategy is I buy what are called deep in the money covered calls, and then I constantly roll them. And it's because I'm rolling them so often, the time that I roll it during the week is actually really important. There's a little bit of a yin and a yang kind of thing. In general, a roll is buying back a call and selling a new call. So it's two different legs in one transaction. And when you sell a call, you're paid. And in general, the further out in time, just what they call the strike date, the call is set for, the more money you'll be paid. Now, likewise, when you are buying back a call, so that's the other part of a roll, right? When you buy back a call, you're basically, I sold a call last week. Now I want to roll it, so I'm gonna buy back the call that I sold last week. The closer you are to the expiration date, all other things being equal, the cheaper it will be for you to buy that call back. So if I buy the call back on Monday, again, all things being equal, I will pay more on Monday than I would if I bought it back on Wednesday or Thursday. Now it's not that quite that easy because the stock price has something to say in this. But let's just say that the stock price is just it's the your strike price and the stock price are the same. So all things being equal, it's better to wait generally. Different stocks degrade in that buyback cost faster than others, and the same thing for that sell when you sell that call. So the day of week really matters a lot. So I started an informal loose experiment just recently where I'm kind of refusing to do any rolls on Mondays because I'm just assuming that it's always going to be pretty expensive on Monday to buy back that call, and the cost and the money that I'll make by selling it on Tuesday is not much less than what I would have gotten on Monday. So the net credit of a roll is basically how much did you get when you sold the new call minus how much did you get or did you pay when you bought the existing call back, and the difference between those is the net credit, or it could be a debit depending, but I always do credits. So so that's how that works. So Monday, the net credit will typically be not as good as the net credit on Tuesday or Wednesday, but that's not necessarily provable. Like I've more or less approved it to my satisfaction, but I'd really like to have a formal experiment. So the idea is if we can think about experiments, we can say that we have a thesis. What did I just do here? We have a thesis. We have a plan to execute the experiment. And then after we execute it, we need to measure outcomes. And then we have to analyze the results. And then ideally, we want to then document new rules. And then by documenting new rules, we can then this opens a door for AI analysis on how well we follow our rules. So that's sort of the idea. So that was an awful lot of talk for the idea of an experimentation framework. And there are a lot of different kinds of experiments that I've run, but I've actually not done them in a rigorous way. And so this experimentation framework concept is actually still kind of new. All right, so throwing a lot of stuff out here. I think that you've got a good idea of where I'm headed with this. What I'm going to do next is off camera. So I'm going to probably refine this a little bit, and then I'm going to present this in a separate video in a bit more of a polished way for the people who don't really care about mind mapping, so they can kind of see, okay, these are the core features and the why of them. What else am I going to do? What I'm going to do really quickly, though, is I'm just going to do a copy and paste of this thing, and I'm going to go to Copilot. Actually, what I'm going to do is I'm going to go Copilot in incognito, so because it already knows too much about me, I'm going to paste this. Let's see what happens when I paste it. All right, I'm going to say, so just kind of doing this right here. This is a copy paste from a mind map. What do you see? And so this is me sort of right away going in and starting to leverage AI as a way to figure out what we're doing. And so great, yeah. So this is doing a really nice, somehow managing to figure out through this crazy copy paste a lot of really cool information and insights about what it is that I'm trying to do. And so this is the kind of thing that I will do. I can't seem to scroll. Why not? Yeah. So this is doing a good job. So it's helping us to kind of show everything that it did. And this is the kind of thing that we can start as input into the spec-driven development process, which is how we're actually going to start building the solution. But this right here is just gets us started on the big picture of what we're trying to build. And yeah, that's kind of where we're at. We got a mind map. We saw the process. It's it's a little bit of a messy thing that you go through, but with a good tool like Miro, it works. I think you could probably imagine too what it would be like if you had couple of people involved in this discussion, because maybe even yourself, as you were watching this video, you're thinking, oh, do that, and then I didn't do it, and you're probably frustrated. But if you were in the room with me, you'd be able to say, oh, yeah, do that. And then even in some cases, multiple people can work on this thing at the same time. So mind mapping is a wonderful exercise, and I highly recommend that you give it a shot. So in the next video, what I'm going to be doing is, like I said, I'm going to do a more kind of, formal presentation of the outcome of this mind mapping exercise, and then lead and start moving right into one of the next things, which I think at this point is most likely going to be thinking about our data model. We know that we're going to need to have a model for orders, a model for transaction history, a model for our current positions and margin information and playbooks and journals. So we know we got to start thinking through a little bit about what a data model would look like. Once we have a data model, then we can start actually getting into building some code. So that's where we're headed next. All right. Well, thank you. Leave a comment, or you want to have a discussion around this, and love to hear your thoughts. Thank you.